Gurmeet, thanks for joining in early morning. I know this is not usually the time that you like, but I appreciate that you're doing this because it's just a very important time, right? Festive season, we hear from comments from Maruti, etc., that things are looking buoyant on the consumption side. Is that good enough for the markets? And is it good enough for the already rallied auto sector?
Neil, I think there is some more legs and re-rating due. The reason is that if you see auto volumes, forget about the price action. Two-wheelers are just back to COVID levels. Even Maruti, for example, which has done well because the small car numbers are actually showing improvement after 2 3 years of degrowth. The stock was some 10,000 rupees in 2017, if I'm not wrong. Right. So while we see the recent run up of 10 15%, but we need to see that the volume growth has been very tepid. And I think the PV segment especially has benefits. So I have a feeling M&M should do better considering that Maruti has some gap in the UV portfolio while they're trying to fill it up. But from a broader dealer inquiry, I think the M&M numbers are not yet out in terms of just the 22nd September sales, but I believe it's been very robust bookings. Now I think they're number two after Maruti. They've overtaken Hyundai. So I think M&M should do well. Plus, obviously, there is that added element of tractors and farm equipments and LCVs in the portfolio. At some point of time, I think there'll be some restructuring also, and you could see, the company hiving off the PV part of the business. It's due actually. So I think that's a benefit there. And I think even in two-wheelers, I think the commentary on rural areas seems to be good. Both TVS, Bajaj, and even likes of Hero doing better. So I think in the complete value chain, if you see there are benefits across, and I think we are getting overweight on this space, Neeraj, across OEMs and ancillaries, adding more weight to the likes of M&M, Uno Mindas of the world, Sandhar Technologies. So we are getting overweight here.
Let me ask you about the point that you were making, consumption, right? Everyone's focused on that. And I went to a consumer durable space electronics store yesterday, and there were buyers at 12 o'clock on a Monday afternoon, which indicates to me that some of that will come through. And the points that you were making on auto is well received. My question is on the financials, though, because I was asking the gentleman yesterday how much of the electronics that you sell go on EMI, and he was saying 70%. And this is something of a trend across the industry. So if white goods, automobiles are going on EMI, don't the financials benefit, and who would you pick?
Yeah, hi, Alice. Good morning. Obviously it's a quasi play because it's the retail lending which is doing the heavy lifting, even for financials and not the corporate book. And I think obviously consumer-facing NBFCs like Bajaj, we've seen strength in Bajaj, Chola, Shriram of the world will do well. Gold-based NBFCs have been doing very well, both in terms of consumption shift, gold prices being firm, so credit costs coming down, and in general cost of funds coming down. One space I like, which is not really related to consumption, is affordable housing. And it's one space which is very difficult to build capabilities in terms of credit underwriting, collection ability, your digital risk framework. And there are very few entities who have managed to do that and command very good return ratios. Home First on the screen is clearly one of them. Aadhaar looks good after, the private equity firms and others taking it over. So this space will get more benefited as more rate cuts and transmission happen. I also have a feeling the risk weight on mortgages can also be relooked at, and it will have a impact. Plus, I think the margins are pretty good once you get the credit matrix in place. So this is another space I like, and I think with some lag, even banks will follow through. I think it's one space which has largely been a relative underperformer, despite rating upgrades of India and banks, CRR cuts which have started in September. It's been a little soft considered, especially the top banks. I think they should follow through. So I think financials are looking good. But would we overweight NBFCs to begin with and gradually get into the tier one banks?
Okay. Gurmeet, the other factor is an interesting transaction that happened yesterday, wherein Kirti Doshi, who runs Antique, has bought 21% or whatever percentage in MK, right? Another firm, and so what is this? I mean, capital market story is alive and kicking, we know, but this was a very interesting transaction. So not about that particular company necessarily, but is this a sign that there is consolidation and there is interest from known parties within the capital market space?
Neeraj, absolutely. And if you see, if you look at even, forget about capital markets, you saw Mr. Damani picking up Blinkit, offline checking into quick commerce, right? So I think the future is more collaboration. I think we are also seeing a lot of small buyouts in even MF distribution space. A lot of, likes of Prudent, for example, are acquiring some of the large MFDs. They recently picked up something in Pune in the unlisted side. So there's some consolidation also happening. And I also think the valuations have become very reasonable, Neeraj. There is a Grow IPO, which is due now. Heavy demand on pre-IPO, Neeraj, let me tell you. I mean, I've been getting so many queries on Grow pre-IPO shares. NSE obviously has softened a little bit, but a couple of months back we have been discussing what's the market. So I think the valuations become reasonable as market improves, sentiment improves, this uncertainty around expiries go away. I think the first focus would be more research houses and asset management companies because there the business is more mark to market and annuity model. And I think the broking and the exchanges will follow through because that's more exchange and transaction volume. So I think you will see maybe the AMCs picking up, the wealth management being of more favor, and gradually, things moving down to the exchange depositories and brokers. But pretty constructive, Neeraj, and we've just started what we just have 11 crore unique, investors, just 4.5 crore unique SIP investors. Remember when Dream 11 got that knock? They had 27 crore users. So I think long legs to go. So any dip is an opportunity in our view.
Gurmeet, we started the conversation with Alex saying that you've missed your tennis match. I thought all the cool people were playing, what is it, pickleball now?
Gurmeet.
Or paddle. Which one is it? Paddle.
Yeah,
I'm on pickle. I don't know if Gurmeet is on pickleball.
Gurmeet
I
बहुत
thought plays
छोटा है।
cricket. I thought, sorry,
नहीं,
Gurmeet के लिए क्या?
He's a tennis player, yeah.
No, he's a cricket player.
No,
Oh
he's a
God,
tennis.
Gurmeet, so this is full confusion over here. You're a I'm sure you're a champion at all of the above.
Yeah, no, the only pickle we like is pickle having chola bhatura. Not the pickle.
Okay. Said like a true champ. Okay. My question to you is, and of course you've spoken about auto stocks, GST, etc. My question to you is, how long is this GST boom going to last from a stock market perspective? Because the fact is that the response to this massive cut has been, I would say, mild, to put it politely, as far as markets are concerned. They have not been impressed. There has been no big boost to it. You're seeing some action in auto stocks today. My question is, will that even last? What is the underlying concern there, or how do you see this moving forward?
I think there's a bit of a disbelief in terms of this getting reflected in earnings. If you see even the August data, electricity output, cement output is 6.2. The core industry output is, I think, 6.3, 6.4, which is a 13-month high. I think the market would want 1 quarter of double-digit earning growth, and that's when it will become broad-based. Look at, for example, Reliance, HDFC, ICICI, and ITC, which is what maybe a 1/3 of the index, right? Hasn't done anything, and that's where you are seeing indices struggling to really cross key levels. I'm sure technical guys can tell you better, but I think it's the wait for the earnings to come over. Also, I think there are few things which are happening which are beyond this, and I think that's where the alpha generation opportunity is. For example, one thing which has gone unnoticed is this TPCR launched by the Ministry of Defense, which is Technology Perspective and Capability Roadmap. Now, this talks about now 450 items versus 230, 240 in the 2018 document. And if you go deeper, it talks about, 50% of the products are now tech, digital, electronics, subsystems. So you have the future of defense also basically is moving towards, tech, platform, software led. And I think that is where I think defense technology could be one hybrid theme which could emerge and be really, really big. And so within that, for example, there is Sudarshan Chakra, where there is a spending of 4 lakh crore envisioned in next 7-8 years, which is your air and space defense system. So a lot of long-term things are also happening. It's just about, in bear phases, you ignore all good developments. Last year, we had so many bad news. Despite that, the markets kept making high. I think that's part of the market.